Hey everybody, I want to spend a few minutes talking about the pros and cons of investing in new construction properties versus already built properties or post-construction. And even though I listed two categories there, believe it or not, this boils down to three categories because we can talk about already built properties, pre-construction properties, and properties that are new construction but you close on when they're done. That's different than pre-construction where you close on it before it even starts with a construction loan. So these all have a variety of advantages and disadvantages to them. Easy to kind of look into the already built properties, right? You know what you're getting. They're very 1031 exchange friendly, for example. You can analyze a fourplex, a home, an apartment building, right? You can say, okay, it's been in existence for 30 years. You can back into maintenance and repair projections. You can analyze the leases, the utilities, and everything that are already in place. And you can pretty much get to a known quantity here, know what you're going to be buying, right? That's a big advantage in it. Another big advantage in that is that you know what your interest rate is going to be. You could lock that rate today. You don't have to wait and take your chances on what interest rates might be in the future. So when we have all of these things, we can drill down to a pretty specific pro forma and have a pretty good idea as to how a property is going to perform. And like I said, 1031 friendly, right? Maybe you've got $100,000, for example, coming out of a 1031 exchange. Well, the already built property is for sale at $120,000, for example. That's a relatively clean exchange that most accommodators or intermediaries can handle. So that's a pretty good summary on advantages of already built properties. Let's move on to properties that you reserve and then you close on. Right? So a builder might come to you and say, I've got this plat. You can reserve a property for a deposit of X amount of dollars. You don't have to close until it's done. Well, one thing you want to be careful of in that instance is, do you have a fixed reservation? Because if all you're really doing is reserving it, that builder can, and oftentimes does, come back and say, well, now the price is different, right? Because there's something different between a reservation form and an actual purchase contract, right? They don't necessarily have to follow through with a reservation form. So you could see pricing shift around. And of course, interest rates will be different. You're reserving it today. It's not going to be done for 7-8 months. You don't know exactly what that looks like when it's all the way done. A plus to that is most of your capital is still in your hands, right? You might have a small reservation deposit down, but you don't have to put your full down payment or the rest of the capital down until the property is done. Finally, we can look at a pre-construction, go through the build, right? Close on a construction loan type property. That's a fancy name for it. I can't really think of what to call it. But you're going to put your money down. You become the owner of the dirt. You have a construction loan and you go all the way through the construction process. You're typically going to have some kind of a refinance done at the end where you roll from your construction loan into a permanent loan. In the FIG world, that's typically a conventional 30-year fixed rate loan, right? Normal one that you're used to. This has some advantages and some disadvantages as well. You've got to make sure as your contract that you signed and you closed on the land at the beginning before construction began, is it a fixed bid contract or not? I'm not saying one of those is better, but you'd like to know if your costs are going to change during the build process. You've got to accept the fact that your interest rate can be a little bit higher by the time the property is done. I know when we build a pro forma here at FIG, we always bake that interest rate a little bit higher than what we know it to be at the current time because we want to allow for a little bit of variation there. So there's not a giant unpleasant surprise in your interest rate when you refinance out of the construction loan into the full 30-year fixed. Another one that's tricky that we're constantly trying to wrap our arms around is the property taxes. Right? If you want to go on an adventure, try calling a county tax assessor and getting them to tell you anything productive about what property taxes might be like on a fourplex or a single family home in a year from now. They're really reluctant to give you anything on that because they don't want to be liable. They don't want to be the one that you go back to and said, well, Susie said it was going to be X and now it's Y. So you have to really kind of look at the comps. You have to go off of past experience to be able to pro forma and dial in what a property tax amount may be. The big pro to this side of it is, especially in this economy right now, where I'm recording this, material costs, more often than not, are higher when you go to refinance as opposed to when you originally contracted. Meaning if I sign a purchase agreement, I'm looking at my date, early February, and I don't close on that till the end of the year, I can't buy that same lumber package or those shingles or those appliances for the same price in December that I bought them for in February. And that traditionally is held to be true in the history of real estate. Very rarely are refrigerators less money in a year, or is lumber less money in a year than what it is now. It's typically the fluctuation is in the land. But I think if you look at those, you ultimately can conclude too that the pre-construction is a little tougher for a 1031 exchange. You're usually only getting the land value. There's some ways to wiggle around that a little bit, but it's complicated. So you can see each of those has their advantages and disadvantages. If you're thinking about investing and you want to dial that in as what you're thinking about, maybe you're thinking about one of our deals, we'd love to help you pro forma that, kind of talk through some of it. That's all I've got for today on the pros and cons of existing versus pre-construction.